Hi there, Andrew Bell with you once again. Well, I think everyone's now aware that there's some change in the real estate market, but we're all wondering whether this is something temporary or something long-term. Of course, interest rates are designed to slow down the economy, and that's what they've been trying to do and doing a pretty good job in the economy. And it's also designed to slow down real estate, but they haven't had a particularly profound effect on the real estate market until perhaps recently. In the real estate market, whilst higher interest rates are meant to temper buyer demand, they also have the effect of triggering more forced sellers, meaning that there's more supply in the marketplace. So yes, listing numbers have increased, giving buyers more options, and buyers have definitely shown signs of being perhaps more selective about the property they're going to buy, and certainly more constrained in the prices that they're prepared to pay. Having said that, the reality is the fundamentals of the real estate market, that's supply and demand, are not changing significantly. Now, on the demand side, if we ever wanted some evidence, it was our last in-room auctions. We had 24 properties to go to auction on the 5th of September campaign, and we sold 20 of those properties. That was an 83% success rate. Now, we had 70 registered bidders, and not only was that amazing, but we had incredible bidding. And we saw some wonderful stories that came out of it. One that comes to mind is a property in Labrador that had a reserve of 1.1 million. It recorded 88 bids before selling for 400,000 over the reserve at 1.5 million. But sale after sale was occurring at prices better than we had anticipated in the moments before the auction. We never dreamt that we were going to get the sort of prices we did. All right, I'll be the first to acknowledge that our office has always produced better results than the market or other competitors in the field of auctions. It's certainly been my passion for the duration of my real estate career. We've been conducting in-room and on-site auctions for some 40 years, and we have the most skilled auction team in the industry. But you still cannot produce these great results unless there is a market there to work with. So yes, we're seeing a slowdown in population growth, which will temper perhaps buyer demand, but that slowdown is largely student visas that have been cut back. And these are not the people who've been buying up real estate over the past 4 years. The core demand for real estate has come from existing Australians and those migrating to Australia who are capable of buying real estate as soon as they arrive here. Those numbers continue to firm. Where the core problem lies is the supply of new homes. Now, the federal government has set a target of building 1.2 million homes over 5 years, but that dream keeps fading month after month after month. The Master Builders Association is forecasting that Australia will build just over 1,035,000 homes over that 5-year period. And that forecast continues to drop quarter after because there is a 90,000 worker shortage in the building industry and incredible issues around productivity. We've all seen the more recent dramas with the CFMEU, and those issues continue and it knocks productivity around. So construction's just slowing on all fronts. Even looking closer, you've probably seen the amount of builders who've gone into liquidation. In fact, it's record numbers. What this means is not only a lack of qualified people to build today, but it actually has an inherent problem that's going to have a long-term effect insofar as the sharp decline in apprentices, because there's no point in them going to get a licence or go through the courses with TAFE to become a builder if they can't get a job. And so the number of apprentices in the market are declining significantly and will have an effect for 10 years or more. So we're not going to see a substantial improvement in supply, which means the fundamental issue for home buyers remains the same for quite some time to come, despite interest rates. Two other quick things before I finish. Firstly, there's wonderful news to report that the construction company Promax has been appointed as a builder to the Arc residence in Northcliffe Terrace, right on the beachfront. As I reported previously, Surfers Paradise is going through the roof with price growth, and it's now rated as one of the top billion-dollar markets of Australia and going through an amazing rejuvenation. Works have already commenced at Arc, and we're seeing the construction of the seawall happening right now, and basement works are scheduled to start next month. These apartments have already captured the imagination of so many, and we recorded a lot of sales prior to the construction commencing, meaning that there's now only a limited number of half-floor residences available and only 3 full-floor residences available, with prices starting at $3,995,000 for a half-floor and $9.22 for a full floor, which by comparison to other apartments that have been built in the marketplace makes them incredible value. It's a small boutique building of just 37 apartments that will undoubtedly become legendary because of their position and the incredible finishes that they have. And the last point I want to mention is the Ray White Service Paradise Muscular Dystrophy Ball on Saturday the 19th of October. We'd truly love to see you there to not only help raise vital funds to fight this terrible disease, muscular dystrophy, but it's also going to be the last fundraiser in its current charity ball format. We've always been innovators, and whilst this has been in its current format for 31 years, it's time for a refresh. And so we have a wonderful new concept from 2025 onwards. So this year's an extra special one to remember. Come and join us, whether you want a ticket for 2, for 4, or a table of 10. It's a wonderful coming together of the Gold Coast community to do something for these kids with this dreaded disease that is really debilitating. Details are on screen now, and we'd love to see you there. That's it for this fortnight. See you in 2 weeks' time.